Hello everyone, and thank you for joining us today. My name is Stephen Primo, and I am the president and founder of Specialist Trading. And for those of you who are unfamiliar with SpecialistTrading.com, we are your premier source for online education and trading just about all of the markets, and most specifically the Forex markets, which I'll go into detail in just a few moments. But also, just to give you a little bit of background about myself, I have been trading for 35 years. I started out trading on the floor of the Pacific Stock Exchange. I was actually on the floor for a total of 16 years, and 9 of those years I was a specialist, hence the name Specialist Trading. And a specialist, for those of you who are unaware of what that is, basically on the floor, if you want to buy or sell a stock, you have to go to the person who specializes in those particular equities. They make the markets, and they actually purchase and sell those particular equities, and they specialize in them. So that's what I was for a total of 9 years for Donaldson, Lufkin, and Jenrette. I left the floor in the mid-90s to manage money, to trade my own account. And in the past 5 years, I've gotten heavily into teaching. I was the director of education for trading markets. I worked with Larry Connors and taught their systems and strategies. And roughly 3 years ago, I decided just to teach everything that I personally trade and everything that I've learned from the floor. And I started SpecialistTrading.com, where, as you can see here, we share the insights, wisdom, and the trading strategies that I learned from the floor. So I want to share that with you. As my students and members know, I virtually share everything that I've accumulated in my 35 years. And what I want to talk about today is actually a special program that we are just beginning for the first time. It will be starting within the next week or so, and that is going to be our Specialist Trading Elite Forex Trading College. As I stated, this is the first time we've ever done this. We've had signals provided for our members for the past 2 years, and we've given strategies for our members. But what we're doing in this particular course is we're combining everything, all of the different strategies that we feel have the highest probability for success, the most consistent strategies that are traded in roughly 35 countries right now by anywhere from beginning traders to hedge fund managers, along with my 35 years experience, and we're combining them all into a 5-week course that is going to be your Elite Forex Trading College. So I'm going to share a little bit more information about that later on in the presentation. I'll talk a little bit about the strategies, and I'll also give you a few tips and insight into some of the signals that we provided for our members last night. I'll share that with you as well. But today's presentation actually is more educational, just for anyone, and you can apply what I'm going to be teaching you very quickly, and that is basically my favorite chart pattern for trading the Forex markets. So for you Forex traders, this is going to be a great presentation. You can see what this chart pattern is, and you can actually start applying as soon as you like. So I'm going to share with you in just a few moments. But before we begin, as always, I ask that you please take a moment to view our disclaimer. As I said, I'm going to share my performance results and this chart pattern with you. But please remember that we can in no way guarantee that any of these results will be repeated in the future. So as you're taking a moment to view our disclaimer, which we're required to show you, I'd also like to mention that the way I like to give webinars is I like to wait till the very end of the presentation to answer any questions. So I know some of you may be having some questions either about the chart pattern I'm going to be sharing with you, or specifically about our Elite Forex Trading College. I promise I'll get to each and every question, but just wait till the end of the presentation and I'll answer each and every question. If you happen to come up with a question once we've completed, don't worry, I will give you an email address as well as a phone number where you can contact us and ask us any questions that way, okay? So I just don't want you to meet all of the valuable information I'm going to be giving you today. I don't want you to lose that. So stay with me, and I promise if you write down the questions, I'll answer them at the very end. All right. Now, when I first started trading on the floor, everyone had a different idea of what success was. A lot of traders said, well, successful trading means you have the best strategy, your best system, or successful trading means that you're making the most money or you have the best indicators. But, you know, most of the traders that were on the floor were struggling most of the time or partially during that time. And so really, you know, successful trading was something entirely different. Until I met my mentors, I actually struggled for a while trading as well. But they really taught me what trading should be, especially successful trading. And this is what I want to share with you, especially for the Forex markets. Successful trading should be non-subjective, meaning that we want to have things that are very close to, if not as close as possible, to being cut and dry. We don't want someone to be looking at either a pattern or some type of indicator or something and having one response where someone will come up with an entirely different response. In other words, two people should look at the same setup and be able to come up with the same answer. And the way you do that is by taking the subjectivity out of that. So successful trading should be as little as subjective as possible. So if you're being too subjective, if things are a little bit too discretionary, you're not going to have that consistency that you're looking for. And that brings us up to our next tenet here. Successful trading should be consistent. And by consistent, I don't mean that every trade should be a winner. I know that's virtually impossible after trading for 35 years. You just mature enough after trading that long to know that every trader will not turn out to be a winner. But what you're looking for are to hit these nice singles, all right? A kind of a two-step forward, one-step back approach. I know a lot of traders on the floor that hit home runs, and every once in a while you'll see a lot of our strategies hit these great home runs as well too. But really, that will not produce a successful trader. There's no guarantee that hitting home runs will do that. In fact, most of the traders I knew that made hundreds of thousands, if not millions of dollars within their year of trading have lost it all. And I would venture to say that the majority of those traders, 99.9% of them, are no longer trading because they've blown out their account. So hitting home runs really does not guarantee that you're going to be a successful trader. Okay? Anyone can make tons and tons of money, and most of them will give it right back. So we want to be consistent. We want to see this nice upward slope in our profit and loss statement. And lastly, what my mentors taught me was that successful trading should be as simple as possible. Now think of it. I've been trading for 35 years, and most of the strategies I trade have anywhere from 3 to 5 rules. And you'll find that most traders who've been trading that long or even longer have extremely simple trading plans. It's the people that have been trading for 5, 7 years, just basically starting out trading, have these real convoluted, really intense type of trading plans that are on all these sophisticated indicators and different chart patterns and different things, different systematic approaches. Trading should be as simple as possible, okay? It's the easiest thing to complicate your trading. This is what my mentors taught me. Anyone can complicate your trading tremendously. It's the most difficult thing in the world to simplify your trading. So once you get that discipline of knowing what not to use and what to keep, you'll see that your trading is extremely simple. So what we want in order to get on board with successful trading is we want things that are non-subjective, that two people will look at the same and come up with the same logical conclusion. We want our trading to be consistent, where we'll have this nice kind of two-step forward, one-step back approach, and then we want it to be extremely simple. All right, so let's now talk about how you're going to be learning that, because remember, this is an educational site. Specialist Trading, even though we provide strategies and signals for our member, it's an educational site. So what we're trying to do, and what my goal is to teach you how to trade with the Specialist Edge. Anyone can provide signals and hope that they work out, but what we're really trying to do is give you the lessons and the tips and the methodology and the material so that you'll be able to spot them on your own. Okay? All right, so here's what you're going to learn today. I'm going to tell you about the truth about formation patterns. A lot of Forex traders love to look at formation patterns. I'll go over the top and the most popular ones. I'm going to share with you the truth, what I feel is after trading for 35 years, what the truth is about formation patterns. Then I'll share with you the truth about candlestick patterns. I think Forex traders out of any market around trade more candlesticks than anyone I've seen. More than stocks, more than E-minis, more than commodities. The Forex traders love the candlesticks, and I'll share with you my beliefs about candlestick patterns. Then I'll finally show you great examples, and I'll show you how to spot my favorite chart pattern. Okay, so you're going to get a lot of information. Once again, I appreciate everyone attending today, and I would please really appreciate it also if you wait till the end to ask any questions. So I'll answer each and every question at the very end, but I'm just going to kind of give you all the information. If you have a question, just write it down, and we'll get to it at the very end of the presentation, just roughly in about 30 minutes or so. All right, so why don't we begin? Let's talk about formation patterns. Once again, Forex traders love to use formation patterns. They love to see what's happening within the chart. And these are some of the most popular formation patterns that traders use. Here's one, the ascending triangle. Now, as you can see here, what we mean by ascending triangle is you have a series of a low followed by a high, and then a lower low, followed by a high that matches the previous high, followed by a lower low. So you have this kind of a triangle that's ascending, and the two highs that met are forming this type of resistance here. And once the conventional wisdom states that once you break out of this ascending triangle, you'll have a very nice move to the upside. Okay, that should match the parallel line of the uptrends. All right, so this is an ascending triangle that many traders use. Now, conversely, you can do the exact opposite, which is a descending triangle. basically the same exact thing. You just turn the rules upside down. You have a high followed by a low, established range, and then a lower high followed by another low that pretty much just matches the previous low, making a double bottom, some people call, and then a lower high, and then the conventional wisdom states that once that is broken, you will have this nice sell-off. Okay, so descending triangles are negative, biased, ascending are positive. Or how about an ascending wedge? This is another popular pattern here you see where you have a wedge formation where you have the market's rising, but it forms this type of a wedge looking at old highs and old lows. And the wisdom behind this is that once it breaks this wedge, you will have a nice sell-off to the downside. And conversely, you have a descending wedge. It's the same thing, just turned upside down. You have this type of wedge pattern. Once we break out to the upside, you'll have a very nice rally to the upside. So a lot of people wait for these formations to form. But probably the granddaddy of all formation patterns is the head and shoulders. Lots of people love to trade this. They always like to look for this for intermediate to long-term types of patterns. And that's basically you have a shoulder, a left shoulder, followed by a head, followed by a right shoulder. And in between, they have the neckline, which is basically the support. Once that support is broken, the conventional wisdom calls for the market to fall off and to sell off pretty rapidly. Okay, that's your basic head and shoulders. Now, let's look at an example in the dollar yen in an intraday chart using a head and shoulders type of chart. Okay, we have a 4-hour chart here, the dollar yen, and as we can see, it doesn't look like much happening, but once you've learned how to spot these charts, you can come up and say, well, actually, we have a head and shoulders. We have a left shoulder followed by kind of a complex head here, and then a smaller right shoulder. So if you were trading this on an intraday time frame, you'd say, well, wow, you know, I think I'm going to sell right here. This is where I should go short, okay? Because this pattern calls for once the neckline is broken, we'll probably have a nice clear sell-off. So you go short the dollar yen, and guess what? Look what happens, okay? Not a lot of consistency there. Didn't seem to work out. So you're stopped out. You lose some money on this trade, and you sit back and watch. But as you continue to watch, you say, whoa, you know, maybe I got in a little bit too soon, because as you're watching again, you see that this is actually the head and shoulders pattern. So you have a left shoulder, a complex head, and then the right shoulder, which was formatting all the time, and you just kind of jumped the gun. So right now you want to go short once again because you think this is really the pattern that you should have been shorting. So you get in short once more, and guess what? Same thing happens again. To see how there's a little bit too much subjectivity in this, it's just, you know, it's just not consistent enough for us to be trading. Now that applies also to support and resistance. Just like candlesticks, Forex traders love to rely on support and resistance. After all, you know, you can see it right there in the chart. It should stop at certain points and it should hold at certain support points. Okay, now this is just your standard, most generic, probably your most perfect support and resistance type of example right here. But you will see things like this happen from time to time. In fact, here's a chart of the British pound. An early chart of the British pound. You can see here that we have a high followed by a low, by a higher high, by a lower low, by a higher high, by a higher low, I should say. And this is nice support and resistance. Now, if this is in an uptrend, the conventional wisdom calls for you to purchase once we get down to the support level, right? That would be the support for this particular trade. But look what happens. There's no consistency in this, and it's once again too subjective. It's kind of up in the air. But then again, you give it a second shot, just like the head and shoulders, and you said, you know what, I'll purchase once we get down to this major support. This is actually the real support. So you put in a buy order there, and then guess what? You see, there are a lot of good traders, regardless of which market or which time frame, that make very good livings trading support and resistance and formations, but they're trading something that they see that most traders can't, and they're too subjective. We want something, once again, that everyone will be able to see, that's more cut and dry. So this is a little bit too subjective for us. You know, one trader's support level may be another trader's resistance level. Now let's go on to some more chart patterns. These are individual candlestick patterns. As I stated, Forex traders love to use candlesticks more than any market trading I've ever seen before. They love candlestick patterns, and candlestick patterns are good. In fact, one of our excuse me, our best strategies includes a specific candlestick pattern. Now, these are the most popular candlestick patterns that most traders use, anything from dojis all the way to evening stars. And as I stated, they're very good patterns. But the only difficulty is that most people use them, in our belief, incorrectly. because in order to use them correctly, you have to be in sync with the trend. And most traders will use these completely out of sync with the trend. But then once again, we get to that old subjectivity. Well, what's the trend? One person's trend may be an uptrend, maybe another person's downtrend. Here's a perfect example. Right here in the Australian dollar, we have the perfect example of an engulfing pattern, okay? An engulfing candlestick bar. This bar totally engulfs the previous bar before that, okay? The up bar engulfs the down bar. This is a very bullish pattern according to the candlesticks. So someone not knowing whether you're in sync with the time frame or not would simply jump in there and buy, relying solely off of that pattern, and guess what happens? So you see, once again, there's too much subjectivity. It's not cut and dry. Sometimes it works, sometimes it doesn't. We don't want something with that low of percentages. We want something that's more cut and dry, that is more consistent, that we can rely on, and that will sustain us, regardless of time frame, regardless of market we're trading. Remember, trading should be non-subjective. As I just showed you, these patterns are too subjective. Someone could see a head and shoulders in one direction, someone could not see it at all. There's too much room for discretion involved. So we don't want to rely on things like that. As you saw, they're not consistent. Support and resistance may work for a while until it doesn't work. We don't want to be, relying on using our hard-earned money on something that may work sometimes and may not work other times. And then also, it should be as simple as possible. Some of these patterns are not simple to recognize. They're difficult seeing where head and shoulders is or where an ascending wedge might be. It's not simple. So we want to use things that are as simple as possible, that are consistent and non-subjective. So where does that leave us? Well, with my favorite pattern. Okay, this is my favorite chart pattern. It's not subjective at all. It's cut and dry. Two people looking at it would see the same thing. It's consistent. I'll show you how consistent it is with some examples. And at the same time, it's extremely, extremely is not even the correct way to describe it. It's just profoundly simple. All right, so here it is. That's it, okay? A bar that closes at or near its high. So let's define this a little bit better. We want to see a bar close in the top 25% of its range, okay? This does not matter if it's a 5-minute bar, if it's a tick bar, or if it's a monthly bar. Does not matter at all. If we see a bar that closes in the top 25% of its range, either at the top or anywhere in that top 25, that top quarter of its range, we're going to be looking to buy. This is a positive sign, okay? Doesn't get any simpler than that. And conversely, this bar. Let's define it a little bit more. We're looking for a bar that either closes at the bottom or in its bottom 25% of its range, regardless if it's a 1-minute bar, an hourly or 4-hourly bar, or a yearly bar. It does not matter, because if we see a bar like that, we're looking to sell. That's it. Okay, doesn't get any more descriptive than that. There's no room for subjectivity. We don't have to sit there and go, well, maybe, maybe not. No, that's what we're going to be doing. Now, why is this chart pattern so important? You may want to write this down. This is the definition of why we want to use or look for this chart pattern. Because when a price bar closes either at or near the top or bottom of its range, it means the market is giving you a clue as to which direction it wants to go. You notice I said the market. We're not talking about some guru, some Forex guru who you're piggybacking off his trades, or some guy you're listening to on TV, or some news report. We're simply listening to the simplest and cheapest way to trade, which is the market in front of you. Whether that's a 5-minute time frame or an hourly time frame, the market is giving you a clue as to which direction it wants to go. And whenever the market gives you a clue, that's the thing you should be listening to the most. Okay? So that's extremely important. That's why we want to be listening and looking at this clue. All right. So now that we've seen that, though, how do we implement it? How are we actually going to use this? How do we apply it with our strategies? Okay, well, let's just say we have, whoops, kind of jumped the gun there. We have a strategy in place. It doesn't matter whether the strategy is based off of the full moon or if it's based off news reports. Doesn't matter, okay? Or even it could be one of mine. Doesn't matter. But here are the rules you want to use, or how to implement this chart pattern. If your strategy, once again, regardless of what it is, regardless of what it's based off, if it gives you a buy signal, use this chart pattern either as an entry bar. In other words, this is the bar you should be choosing to enter off of. Or if you are in the trade, use it as a directional tool, meaning that it's telling you the short-term direction of the market, whether it's still going in your desired direction or it's changing. Okay? So in other words, if you get a buy signal, rather than just simply buy at the market or place a limit, wait for this bar to approach or for it to appear. And that's going to be your signal, your trigger to get in. And the same thing works if you get a sell signal. Okay? Doesn't matter what strategy you're using. If your strategy gives you a sell signal, rather than just selling at the market or waiting to place a limit, just simply look for and use this chart pattern as your entry bar, or use it as a directional tool, telling you if it's still safe or okay to be in that short position. All right, so let's apply this with a real basic, simple strategy. Let's first start looking at some daily bars to show you how this really works and how consistent it is. I'm not going to sit here and tell you that it works 100% of the time, but it's got a tremendous, tremendous edge for high probability for success. So let's say our strategy is built off of a pullback type of method, meaning that we find the trend, and once we find the trend, we're looking for little pullbacks against that trend to get in. Okay, so if we're going long, we're looking for a little sell-off. And if we're going short, we're looking for a little blip in price or a little rally. That's the pullback. All right, so here's a current chart of the British pound up to roughly the end of September. As you can see, we were in a clear-cut uptrend that entire time. Excuse me. How could we have taken advantage of this chart pattern? Well, remember, we're in a type of strategy that calls for a little sell-off since we're long. So we're looking for a sell-off, which would be right here, the pullback. And then rather than just simply place a limit order or buy at the market, we want to wait till we find a chart that closes in the top 25%, as it does right here. So this is our entry bar. As you can see, once that bar appeared, the British pound went up 250 pips. All right? So it continues to go up until it gets to this point right here, and then we start to sell off again. So then we're looking for another pullback because the trend is still up. So we're not, rather than saying, well, I'll just place a limit somewhere based off of a Fibonacci retracement or based off of support. No, let's wait for the favorite chart pattern, which is right here. Okay, we close in the top 25%, and after we saw that bar, guess what? British pound went up 400 pips. Okay, see how simple that is? Simply by waiting for that chart pattern. Here's another daily bar of the daily charting of the dollar Swiss franc. Clear-cut downtrend in place. So since there's a downtrend, our philosophy of trading calls for pullbacks. That means we're looking for some type of rise or some type of rally. Okay. Once we see that rally, such as we have right here, rather than try to pick some resistance level or some Fibonacci retracement or wait for news to come out, we simply wait for that bar, which is right here. We close in the bottom 25%, and as you can see, it quickly went down 100 pips. Then we have another bounce. Look for that bar again, bottom 25%, sell off 150 pips. Kind of a sideways rise right here, but we find another bar that closes in the bottom 25%, and so on. You see this happen over and over and over again. All right, these were daily bars. Let's look at the same example now, looking at weekly bars. Okay, just to show you how consistent it is in every time frame. Here's a clear-cut uptrend now of the Swiss franc on a weekly time frame. This was the sell-off that we were just looking at on a daily time frame, but let's go on weekly bars all the way back to 2011. As you can see, we're in an uptrend, and here are the bars that close in the top 25% of their range, signaling time for you to enter off of a pullback. And that was a nice 1,800 pips from the very lowest chart pattern. How about monthly bars? Okay, well, let's look at monthly bars. The same thing. We're looking for the trend. The trend is obviously down, so every time there's a little rally, we're looking for that bar that closes in the bottom 25%. And look at every time you see there at that rally, that's giving you some type of a sell signal. It's just basically giving you a high probability direction as to where the market's going, or a high probability entry bar. Now, this even works on intraday bars. Okay, so let's look at a 60-minute chart of the Swiss franc. As you can see, we're in an uptrend. We have a nice bar here that closes in its top 25%. And look what happens, 40 pips to the upside. Okay, then we have another sell-off. Bar closes in the top 25%, 50 pips to the upside. If you'd like to trade tick bars, here's the euro-yen. All along the downtrend, these were bars closing at the very bottom of their range, and then the trend changed, and you see bars closing in the top. So this is a great directional tool once you're in a strategy. It's also a great entry bar. But let's recap. Remember, we talked about the truth about formation patterns, all right? They're great patterns, but they're just a little bit too subjective. See, people can make money off those. As I said, I know a lot of traders that do very well, but the only trouble is that it's too subjective. You know, we don't want some traders doing well off the same pattern where others are doing the opposite. We want everyone seeing the same thing and doing the same thing. So to recap, the truth about formation patterns is that they're too subjective. Same thing with candlestick patterns. They're great patterns. We use them as well, but most people use them incorrectly. They don't use them in sync with the trend. That's why it's far easier and a lot more inexpensive simply to use my favorite chart pattern. You don't have to rely on any trading room to subscribe to or any newsletter to subscribe to. All you have to do is simply look at the market in front of you. Now, points to remember, extremely important though. This is not a complete strategy. I know a lot of you are probably punching up live charts right now looking for ways you could have gotten long or short today, specific currency pairs. This is not a complete strategy. Remember, this pattern is best used as either an entry bar to a strategy that's already in place or a directional tool, meaning that you're already in the position and you're using this as confirmation that it's continuing to go in your desired direction. But in order for this to work, properly, you still need to know about proper stop placement, exit signals, and money management, because these are all the pieces of the puzzle that come together in forming a complete, consistent strategy. This is just one piece of the puzzle which I gave you today. Once again, you need to know about stop placement and different types of stop placement, different types of exit signals if you want to take conservative or aggressive signals, and different types of money management. Now, if you give me a few moments, I'd like to speak about our Elite Forex Trading College, because we cover all of these in the new program that we're starting up. Remember, we're putting 35 years of experience in 5 weeks of detailed instruction. And this comes along with 3 of my most consistent proprietary Forex strategies. These are great strategies. In fact, just to show you a little bit about what they did last night, one of the strategies told our members to go long the Canadian dollar, which last time I checked it before we actually started this presentation was up roughly about 40 to 50 pips. And it also told our members to go short the Australian dollar. And last time I checked, that was actually gaining about 70 pips. So they have tremendous consistency. We're not going for home runs, but they do tremendously well. Another one of our strategies has over 125% gains in just 2 years since we've been issuing these signals for our members. Now, we come complete with exits, entries, and stops, so you know exactly where to place your orders, where to place your stops, where to exit. And we'll tell you how to trade conservatively or aggressively. We also provide you with signal alerts. Just as I said, last night we provided our members with signal alerts either to enter into these trades. And you can take these if you want to or not. But basically, we really want to teach you how to spot these, and you use the signal alerts as confirmation that you're in sync with the strategy, that you understand the rules. This also comes with weekly webinars, just as the webinars I gave you today, where we try to give you different tips and techniques to elevate your trading. Now, once you decide to become a member, you get immediate online access to all of the rules. It's not something that you have to wait for something in the mail or get a special key. You will be up and running literally within minutes after you sign up. As well, you get my personal email access, so you can contact me at any time. I was answering emails before we started this presentation today where a member was asking why one of the signals was generated last night. So you can always stay in contact with me, and once we conclude the 5-week training, you're still in contact with me as long as it takes for you to understand the process, okay? Now this complete course usually runs for $19.97, and in fact, if you broke everything down and sold them separately, it would be worth roughly about $5,000. But because you're attending today and joining this presentation, we have the early bird price of $14.97 discounted down $500. Remember, this includes 1 year of trade signals, but it's only for a limited time only. So we really implore you, if you're serious about taking your Forex trading to the next level, about using tips and techniques such as I just shared with you from 35 years experience, it's really in your best interest to take advantage of this special discounted price, $500 off the normal price. Once again, if we broke everything down, which we will be presenting you, this course would roughly cost close to $5,000. Now, we've given some great signals to all of our members. I know that we may have some members here today in attendance, but this is really built off consistency and off teaching you so that you have the education to make these decisions for yourself. Now, as I told you, I wanted to share with you the last portion to go over any questions you may have. Now, here's our information. If you'd like to email us, you can email our VP of Research and Operations. That's Brett Marsh at brettm@specialisttrading.com, or you can call us directly at area code 310-844-7220. And here's the link below if you want to have immediate online access, and just simply click that on, write that down, and click it on, and you'll become a member in the next 5 minutes, okay? Let me open up the question and answer box here, so if you have any questions, we can get to them right away. I just want to really stress, though, that even though we provide you with signals, as I told you, we provided our members with roughly about 2 or 3 signals last night, and last I checked, all of them were profitable. This is more of an educational course where that you will, after the next 5 weeks, be able to spot these signals on your own. One of the best things about the 3 strategies we'll be sharing with you is that they can easily transfer over into stock trading and into E-mini Forex trading. I'll share with you just the slight different nuances you have to make for those particular markets, and you'll be able to use the same strategies on those different markets. So it's great because they can transfer over easily. So even though they're designed for the Forex market, they can be transferred over and traded in those markets as well. And remember, you can also use them for intraday trading. Some work better than others. Strategy number 6, which is one of our 3 strategies we'll be sharing with you, is actually, in my opinion, a better intraday intraday strategy than it is overnight. But we'll be showing you exactly how to do that in the course. Remember, if you want to take your trading to the next level, I know a lot of Forex traders are struggling. I know that's probably why you're here today, and you're having a difficult time. You feel that things are tough to get in sync with the markets, or you're not really sure about which direction to take. Maybe you've had a series of losing trades and you're afraid to pull the trigger. This education will take your trading to the next level and give you that consistency I think you're looking for. Remember, I'm there with you the entire time. I'm trading right alongside with you. So any questions, you can always email me, always ask me anything you'd like. Well, I guess I must have explained everything perfectly. I see there are no questions. I just want to go over, once again, if you want more information, you can go to protraderstrategies.com and find out about the Elite Forex Trading College. Oh, I see there's a couple of questions right here. Sanjay asks, do you only trade towards daily trend, or the trend if the period you are trading, in other words, 1 hour? No, that's a good question, Sanjay. All of these strategies actually are based off of any time frame, but I think if you're asking, do we use a higher time frame to discern what the lower time frame is? No. I mean, some of our students like to use that technique, but we really don't. That's not incorporated within the actual course, because I have found over my 35 years that there's really no consistency in that. Remember, I was talking about the consistency in chart patterns and chart formations, the truth about that. In my opinion, the truth about using different time frames, there's no real consistency. I know some traders swear by that, but I have found no consistency in that. So we just trade the signal on the time frame that's given. So in other words, if the hourly time frame gives a sell signal, but the daily time frame looks to be in an uptrend, it doesn't matter to us. We'll take the time frame, whatever the signal is issued in. Okay, I hope that answers your question. And then once again, remember, these signals are valid in any time frame. Some work better in other time frames than other, but they're still valid. You're still going to get them in any time frame in any direction. Okay. Let's see. John says, I missed the session. I had a power failure. Sorry about that, John. Do you have the season on the internet? The session on the internet? Well, this is going to be recorded. We are recording this particular presentation, so you can email our VP of Research, that's Brett Marsh, right there, and the email address is given, and he'll send you a copy of this recording, okay? But if you're asking whether the course, yes, the course is actually on the internet. You don't have to get mailed anything. The actual 5-week course is going to be live. You're going to be really in detail conversing with me and interacting with me over the internet, and we will be talking, and you can ask me questions live just as we are today, and we will spend as long as it takes once a week for 5 weeks. And then after that, I'll still be there with you. Any questions you may have, you can ask me as long as you want. So don't worry. It's not like something that once it ends, it's over. Okay? Sure. You just contact Brett, and he will mail you the session that's been recorded. Okay? Good questions. Once again, the information you need is right there, or you can give us a call. I believe that's the phone number right there, 310-844-7220. Okay? Remember, these strategies are traded in 35 countries. They're traded by beginners to hedge fund traders. So they're tremendously transferable onto either trading aggressively or conservatively. But that's the consistency behind them. Remember also, just to let you know, we will have these sessions that were given in the course, the 5 weeks. They're also going to be recorded. So don't worry if you can't happen to make a time and say, boy, I would love to take this course, Steve, but I don't have the availability during the day. Don't worry, everything is recorded so that when you can home or you can watch the recording during the weekend. And then if you come up with a question, you can email me over the weekend and I'll answer it just as quickly as possible. Okay, so even though we will have live classes, those will be recorded as well. Okay. There's just a ton of information. Once again, one of these strategies, our premier strategy, has generated gains of over 125% in just 2 years. And when we say gains, we're not talking about hypothetical. These are actual emails that were sent out to our members the night before telling them to get long and where to exit and where to place your stops. So these are actual real-world trades that we were issuing to all of our members. The other strategy is roughly about 50% in 2 years. And the other one is a great strategy that we just started that we really feel has a lot of potential that just produced those 2 winners I told you about in the Australian dollar and the Canadian dollar. So these are great strategies for any time frame in any direction. All right, if there are no further questions, this will bring us to the end of this presentation. Remember, if you have any, I know a lot of people often come up with a question once we've concluded. Feel free to email us, as you see right there, the email address, or you can just give us a call at 310-844-7220. Now, Frank, this course would normally cost about $5,000. We broke it down to have a price of $19.97, but because you've attended our webinar today, we've dropped that price by $500 more down to $14.97. So it's a tremendous deal. It's only $14.97 for 35 years worth of knowledge, just condensed into 5 weeks of training, okay, along with 3 of our most consistent strategies. So Frank, this is a great course. It's something brand new we're starting. We usually just did things individually and didn't have any interaction with our students, but now you're going to get the interaction with us live every week if you'd like. Okay, so we really urge you to take advantage, but remember, this $14.97 discounted price of $500 is only good for another day or 2. So please take advantage of it if you're serious about taking your trading to the next level. All right, well, if there are no further questions, thank you so much for attending today. Thank you so much. I wish you the best of luck trading, and I really look forward to you becoming members of Specialist Trading, and especially our Elite Forex Trading College. Thanks again. We'll see you next time. Bye-bye.